What's going on, guys? Welcome back to the channel. And yeah, we hit 1,000 subs. Happy New Year. Man, I got a mess to clean up now. Oh, that was totally worth it though. Let me clean up my desk a little bit there. That was awesome. I'm gonna take this off. All right. Let's go. Get the comments up. Hey, if you can hear and see me, throw it in the comments, and we will get started. So, kind of crazy to think that there's 1,000 people out there sub to me. It's kind of weird. I mostly made this YouTube channel just to document my thoughts on different stocks and whatnot, so I could reflect on it. And yeah, a year or two later, here we are. Let's go. Oh man, hey Fuhat, how's it going? So for 2024, what are we gonna do? I think it's gonna be more the same. Don't worry. Oh, you got some confetti. Okay, cool. Don't worry. I'm probably not going to keep up a lot on the reactionary content like Dave Ramsey and whatnot. So yeah, I don't know. There's certain things like Dave Ramsey and Everything Money. There's certain things that I think are like so ridiculous, so ridiculously stupid that I like almost have to say something. But that's not the goal of the channel. Goal of the channel is really just to hang out, find a good community, talk about stocks, learn about valuation, try to find flaws in my theories for valuation or how I'm valuating a company, and kind of go from there. So 2024, we're going to keep up the live streams. I think those are really fun. And that's kind of like the main thing is like, if I want to do it, if I think it's fun, I'm going to do it. But the bulk of the content is I really want to keep the weekly live streams, the exo liquidity live streams with Fabio, Dan, Bacon, Andrew, other guests. Those are a good time, and I think we get a lot of good valuable content out of those. And then I'm gonna try to get back on the kind of individual company videos, but those can be hard at times because like sometimes I just like I don't want to make repetitive content, and I don't potentially want to just like churn through companies that I'm not really interested in, right? Like I want to actually have a good sense of it. So for 2024, I think we're going to start out, and it's going to be a little bit cybersecurity themed. I think the first video that I'm going to do is probably going to be Fortinet. And if you're in the various communities, you have probably, well, even the live streams, we've talked about Fortinet before, but I want to start doing dedicated videos to each of these cybersecurity companies. So I want to do Fortinet, CrowdStrike, Palo Alto. I already have a video on ANET, and they're not really a security player, but they could be. There's ways. So they could delve into some type of DPI, network detection and response if they wanted to. And they actually have product lines that they might actually do that. So yeah, that's kind of what I'm looking at for 2024. Courses win? Never. Sorry. No. If you guys want to support me, you can. There's other ways to do that. You can. The Discord's free, but you can sign up for a supporter tier. I think I've got super chats enabled now on YouTube. There's the valuation template that you get with the subscription on the Discord for $5 a month. If you guys are interested in that. But really, it's just about kind of growing community, gaining more knowledge together, and trying to find some type of edge, some type of opportunity out there, right? So, because I mean, really, like, especially, I mean, it's 1,000 subs, guys. It's not that money, right? So, especially at my size, even I feel like you have to get to almost like 100,000 subs for it to really make sense just to focus on, like, I don't know, content for content's sake. At this stage, I mean, I'm way better off if I can just get like a 1% like literally a 1% variation on the SPY, now performed by 1%. That's going to be way more than what YouTube gives me, right? Stone Cold Super Advantage Investor course for $99.99. Oh yeah. Or what? You know, you got to do the really grift thing and be like 420.69, right? So that's it. I support this. Oh man. So I don't really have too much of a plan today for this live stream. Yeah, happy New Year and congrats. Thank you. Happy New Year to you as well. 2024 is gonna be good, guys. It's gonna be good. I'm feeling it. But I don't have a lot planned for this live stream. Just kind of want to jump on and say thanks. If you guys have any questions about anything, go ahead and leave them in the chat. And yes, honey. Thank you, Shelby. Love you. Now you can drop off of the stream. That was my wife. Yeah. So hey, yeah, my wife that throws things at me during live streams. She supports me in various ways, including providing you guys entertainment by throwing stuff at me. So that's good. Bye, baby. Oh man. We got the college football playoffs today. That's gonna be fun. Let's go dogs. Go dogs. That's gonna be a fun game later on today. But yeah. For 2024 though, I'm pretty happy with my portfolio right now as it is. Accumulated some pretty good assets in 2023. And as a lot of you guys know, if you're in the various discords, I mean, shoot, it was really the year of reaccumulation for me mostly. Recently I did pick up a new position for Fortinet, so FTNT, and that one's already kind of started running on me. So I got it built out to a decent spot. I'm pretty happy with it right now, but if I see further weakness and opportunity, especially in cybersecurity, as we go through this kind of like cybersecurity, like, I don't know, videos, I'm going to try to pump out maybe one a week. I'm going to be looking for opportunities in that space. It'll be interesting to see how the different sectors of the market work through 2020, 2024. And you know what? Speaking of that, you know, let's can I put up Finviz map? We're gonna do a share. Let me go here, Finviz, and let's just look at the S&P 500 year-to-date performance, 1 year performance, S&P 500. So yeah, I mean, it's been it's kind of been like the big tech, the year of big tech, the year of the Qs, right? QQQ. Microsoft, Apple, Nvidia, Google, Amazon, Tesla, all just insane. Meta up 206% on the year. Is that really? Jesus. Year to date. Let's see if it's 194. Sorry. Year to date is 194 on Meta, which still crazy to me that Meta got down that low. Some reflection and a learning on my part. I shouldn't have trimmed Meta when I did. I still made a decent amount of money on it, but you know what? I really want to, especially the assets that I think I can buy and hold like forever. I really want to take advantage of just like buying solid companies and holding them with no plans to really sell unless the thesis like really breaks and it's obvious that, you know, you need to potentially get out of it. So let's see. Fuhat, cybersecurity. Yeah, man. Yeah. You gotta get a job in cybersecurity, man. I'm telling you. Go work at like a security operations control center or something like that, man. Go make that money. I'm telling you. So yeah, I mean, we can see that the overperforming sectors were really technology or technology adjacent related. Amazon, Tesla. Financials did pretty decent. Kind of the laggards were going to be energy. Where is real estate in here? Utilities. Let's see. Where's real estate? Okay, real estate Didn't do too bad. You know, there's a little bit of green in there, but yeah, it'll be interesting to see where the opportunities kind of lie in 2024. I feel like right now there's just nothing that's super obvious. If anything, I could potentially see myself adding into more REITs upon further weakness, if they get like a pullback. Um, and we'll see what happens with that. If we go over to the portfolio, I usually, and I stopped doing portfolio updates, but I kind of want to share a little bit today. And let's see what I want to do. I'm sitting at about, well, right now, total port route wise, we're sitting at about 63% of VTI and SPY. Individual stocks really kind of took off this year just with the couple of crazy winners. And then, so large caps about 16.8%, mid cap 2.5, small cap 1.9, REITs 8.7. So yeah, it was the year of accumulating REITs for sure. And then if we dive down deeper into the individual stock portfolio, we can see Meta is definitely the largest position at about 20%, 19.3%, a 250% gain. KRC is bouncing back nicely, and that was kind of my bigger position within the REIT space. Allocation is now about 12.6% at a 23% gain. Amazon built that out as well, going into 2023. Wish I would have built out Amazon and Google larger in that time, but you know what? Hindsight's 2020. Never going to get them all right. So Amazon 59% gain, about 11.88%. Google 39% gain, 10.92% allocation. I could see myself adding into Google, honestly. I could see myself bumping it up, and I could actually see myself potentially bumping Amazon and Google up. Small amounts here and there, just as like cash comes in. So yes, Andrew, New Year resolution, more cyber streams with Jesse in 24 for sure. And I'm trying to me and Andrew have been talking. We're trying to see if we can do some type of regular cybersecurity live streams or recorded format or something like that. That's more of a deep dive into individual companies. Whether I do that like individually or with co-hosts or other people. Andrew would definitely be one of those that I would love to do more content with, for sure. So when it gets to like, I don't know. So a lot of these are kind of I wouldn't say starter positions. They're core positions. They're just not like super, super high conviction core positions. I would say high conviction, but maybe I just didn't get the absolute pricing that I wanted, right? Like Google, Amazon, KRC, and Meta, I felt like I got like really, 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 really good pricing on, and I felt more comfortable with them being de-risked that much to make them a larger allocation. So IAPR is one in the REIT space, cannabis space, cannabis REIT. So that would actually probably be one that I would consider cutting or trimming pretty heavily if it ran. Just because I think there are certain risks that are going to develop with that space over the next couple of years. I could see them having a little bit of tailwinds and then having longer term headwinds, especially as traditional financing becomes available for some of those businesses. So I would not be surprised if I eventually cut IAPR and put it into something like a CCI. CCI, I think, is going to potentially have a weak 2024. They still have a bit of runoff for that Sprint T-Mobile merger. So they're going to have some leases dropping off for the Sprint towers. But, I established this before that Elliott management letter was released. And it pretty much, they identified a lot of things that I felt I identified, where there were a lot of possible synergies that they could come up with. I think they can, I think they can squeeze a lot more money out of their fiber plant, but not only that, the tailwinds with small cell and the fiber plant that they have put them in a really good position to, package small cell leases to carriers. And small cell is going to be something that is probably just going to grow for the next decade. through 5G and 6G deployments. So I'm really, really interested in CCI. You know, hindsight, yeah, I could have taken a larger position when it was in the 80s, I think. But you know, that's where I took most of my position. But I could see myself adding up into that. So especially if IAPR ran and CCI was kind of getting, I don't know, just chilling for a bit, I can see myself moving in that. BDN, that's a higher risk. It's a much higher risk office play. Of 24%, 4.4% allocation. We got FTNT, and that's the newest, probably the newest position, I think. It's Fortinet. And I came in with about a 4% allocation, and we're already up about 11%. Shutterstock is also a somewhat new position, up 19%, about a 4% allocation. And then we got Crocs, which is actually down 7%. My one negative position right now, pretty crazy. But man, Crocs, if they just keep chugging, could be a really good buyback story. ANET. Oh man, ANET. I love you, ANET. I did not go heavy enough on this one. I think they got a lot more tailwinds than I expected. So yeah, I'm just gonna ride that. Disney, got some Disney, Musa, ASO, ARE, Paycom, which yeah, we'll see. We'll just see where the opportunities arise. We'll see what happens in 2024. I'm feeling pretty good though. You know, it's it's everybody did good in 2024. Like I would hope everybody did good in 2023. I would hope everybody did good in 2023 because it was just like a vertical line year. So it's not very impressive to have a decent year in 2023. It's more about when when the market has those rough years or those flat years, how are you doing? And then let's bring in Dan. We got Dan. What's up, man?
What's up?
How's it going?
I missed your I saw you pop something at the beginning.
Oh yeah, man. I was gonna have one of those like those party blowers too, and do the blow pop. But
Oh my god.
I figured that was a perfect way to intro the 1000 sub celebration for sure.
I'm watching your team or your dad's team crush Liberty. I was like, holy shit.
Dude, they were looking bad in the the Ducks were looking bad in the first quarter as well, man. Like rough. But hey, they what are they? I think at half it was like 31-6 or something like that.
Yeah, it was over at half. So
yeah, they like decided to actually play some ball in the second quarter and
I guess
scored
Jeez
like
wasn't
20.
on Liberty's side this time.
Oh yeah. What's the score now, or did you
38-6?
Oh man, dude. So I know everybody. I was one of the people that was like, oh, FSU should be in the college playoffs. But after that beating from Georgia, I'm like, maybe, maybe not.
They all like what was it, 20 of their starters sat out though. So I think for FSU.
Yeah. Oh man, what if someone shorted Nvidia though?
We were joking.
I love how we reconstructed that entire thing.
I was going to respond, but I don't want to get banned in my second account, so I'm going to be tactical. But he banned me, started me going the dark place.
Yeah.
Yeah, but like we were saying, like Nvidia could be $1,000 a share. I wouldn't.
Oh yeah.
Like right now, I could see that by next December. If you, I wouldn't bet against that.
Yeah. Well, like, and I mean, I've talked about just I feel like I know the industry pretty well, and I've talked about having like a specific something specifically happen for me to even like consider shorting a cyclical downturn in Nvidia. But dude, I would not touch it until that signal. Because yeah, man, this could it's on momentum now. this thing could fly. And look, it's like breaking up even further. Like, oh, man, I kind of want it to. I want it to just rue to like $1,000 a share. He'll be
Oh my
down.
God.
Oh, dude. So he would be down. Let's pull
What
this
do you
up.
think, like $20 million? Like,
I think right now, because somebody said that he said that his break even was 380 was his break even. So what I think he did is I think he has December 2025 300 strike calls. I think that's what he sold. Because they were right at about maybe like 85 $90 back in May, and that would mean his break even would be like 380 390, right?
oh my God.
Because that's the premium he received. So and that would be around 300 contracts to get like a 2.5 million potential gain premium harvest, right? So 300 contracts at a 300 strike, dude, it would be so bad. So like what
Why?
is calc? I've got a calculator, you guys can't see it, but if we had oh gosh, if we had $1,000 per share, minus 385, 615 times 3,000, because you have 300 contracts to the 100th or to times 100. He would be down 18.5 million at that point.
Oh my God.
So I think and then I like did the calculation off of the comment information that I got, and I think he's down probably around 4.7 million right now. Assuming his max upside was like 2.5 million. If his max upside was like, 3 or 4 million, yeah, he's gonna be down like probably 7-8 million right now.
Oh my God. Should have listened to Warren Buffett. Just put it all in this S&P 500 and
Dude,
play with
hey man,
like a
he
million.
just needs 8% to be a billionaire.
Yeah, something else. I can't believe it. We'll be here for it.
It's wild, man. I just like I don't know.
Someone's I saw one comment. It was it might have been your video or one of mine, where he was like, what's the point of making fun of these people? We all make mistakes. Everyone could screw up in investing. So why rip these people apart? And it's like, first, like they're purporting themselves to be gurus of investing. Like, we didn't force them to do this. So he's trying to say that he's some investing genius, just like other like grifter people, and they charge for like software or something like that, which is not the same as a Discord group, like a community.
The thing that really pisses me off is that, like, in general, I would say, like, beating the market is fucking hard. Like, and these guys make it sound like, oh no, it's like, it's easy, man, it's easy. Especially when you look at like trying to beat the market on like a volatility risk adjusted basis, it's really freaking hard. Like, I don't know. I hate how cocky they are. And then like people will take that cockiness as like confidence and they'll trust them. And then like you just have to point out the stupid shit that they do, because it's like, hey guys, like this guy could potentially get wrecked or is getting wrecked. And he's, portraying himself as this like investing guru essentially online, being like, oh, value, blah 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 blah. Like it's super dangerous, man. And it's dangerous in the same way that like Dave Ramsey recommending a 8% safe withdrawal rate in retirement is dangerous. Like I mean, I know like, our channels are only like, 1,000, 2,000, a couple thousand subs or whatever, but it's like I feel like almost obligated to make some type of comments or content to be like, hey, this is really, really, really stupid, and here's why. Like, man,
that it's just a weird place. Like, if you put it out for public consumption, why can't I criticize it? Like,
yeah,
for any of these, and I wouldn't go after like a person on YouTube, like just a person putting their opinion out there about a company that doesn't charge like any sort of fees, no investing courses. Yeah, that's their opinion. So be it. Depending on if they have unless they have like 30 videos on the damn thing, like Palantir. But
SoFi.
yeah, yeah.
Yeah.
But I mean, Paul's created a investing DCA software tool that you're supposed to use to make investment choices. So I mean,
Yeah.
he deserves to be scrutinized for that.
Yeah.
I don't understand why you would say someone would say not to. Just weird.
Well, it's so silly too, because like his analysis is so surface level. Like it's not even like analysis. It's like, oh, pop in some numbers, look at historical stuff. But like to actually have an edge in the market, you have to know that business industry so well. And you have to like be able to detect that there's this a potential disconnect, right, in the fair value risk adjusted for debt sector, tailwinds, headwinds, whatever, compared to what the market's giving it. And it doesn't happen that often. Like, I think, like, I know we make fun about like market efficiency. I think generally the market is pretty efficient, right? But there's like those opportunities where there's potentially large inefficiencies.
I
Um,
don't like when people purport that it's a law, right? Market efficiency, it's a theory.
no,
But like I would agree with you. In general, it's probably true, but
yeah,
some people go way far where they're like, it is a thing. I'm like, it's really
yeah.
not. It's not like the law
There's
of gravity. Like it's still
nothing
a
is,
theory.
and even to go off of that, nothing is priced perfectly, right? You know what I mean? Like nothing is priced perfectly with all future variables known into the next 20 years.
Yeah.
you
Well,
know,
it's like
cash
CrowdStrike
flow
is
back
probably
tested
joining the
to
S&P
current.
500 this year if they are profitable, if they maintain profitability. So you would say, well, the market will know that's coming and priced it in. I was like, no, no, no. When
Yeah.
they announce that, it's going to go up like 15% probably.
Yeah.
Just like Uber did.
Yeah.
So,
But when it actually happens, it'll probably just stay flat for 3 years like
yeah.
Tesla. No, and I don't know. I believe like generally like the broader the index, right? Or the broader the basket of companies, the more general market efficiency you'll have. But there's always going to be things that aren't being priced perfectly, right? Whether that's
Mhm.
like Nvidia being priced really high, not accounting for potentially a future down cycle, but that down cycle might not come until 2026. We don't know, right? We don't know how long those tailwinds are going to be. I guarantee you eventually, they're going to have a cyclical pullback and it's going to be vicious, but like
Like right now, they don't really have a competitor. Like
yeah, yeah.
AMD is not a
And
like not by size. Like AMD has a
the
product, but it's
biggest
not even close.
I really think the biggest threat to Nvidia are the large tech companies themselves, right? Once those large tech companies like Google, Microsoft, Meta start developing and like architecting and building their own ASIC chips that are specific to their compute needs, that's when I think Nvidia could get really crushed.
Hmm.
Um, so there's kind of two things. There's going to be the market, the cyclical. I would say we're like in an AI super cycle right now, where all of these large companies are basically getting their AI infrastructure built, right? So we're going into like a new like compute decade essentially. So it takes all of this upfront capex to build out that infrastructure, both on the networking side and the compute side. Um, but once that is potentially done, then really your net new orders are just going to be for your like 5-6 year capex replacements and potentially your organic like DC growth, which is going to be muted more at like 20%. So,
Hmm.
and that's where you get like that cyclicality comes in. So I like, oh man, but I, may, I would not be surprised when Nvidia goes to like a 2 trillion market cap. I mean, crazy stuff happens. It doesn't mean it's going to stay there. 2, 3, 4 trillion, whatever. It doesn't mean that it's going to stay there, but it could definitely get there. And absolutely wreck somebody.
I can tell you
So
honestly, part of me is really debating shorting Coinbase. I'm so thinking about it, but
oh yeah.
You want to talk about cycles? I don't know, but
Yeah, I feel like it's just in a
everyone's so
rough,
exuberant right now about crypto, which is just kind of
yeah.
wild. But
Dang. Man, it had a run.
I know
$30 to almost 185. Jeez, that year to date is nuts.
makes me think. I'm like, because I don't know. I'm like, will Coinbase? This is probably more than I ever talk about shorting, but I'm like, I don't know if Coinbase will benefit from the ETFs if they ever come to fruition. I don't know. So that's what
I
I'm kind
think
of
it's
thinking.
gonna
I
be
don't think they're going to benefit from it.
it's gonna be like BlackRock and Fidelity and Vanguard,
And
right?
Robinhood.
Like, yeah, like I don't see it. But that's like the hard thing about shorting is like you could be right, but the market might not recognize that you're
Yeah.
right at the right time, right?
Yeah.
So you could be right and still lose like tons of money. Like Paul could be right, but if it's like he took the position now and he's right in 3 years, like he could be blown up.
Yeah. Because like it could start
So,
happening. Like they could start losing revenue from trading. And then it may take
yeah.
what 2-3 quarters for it to you see it in the financials, and then maybe it takes another 3-4 months for people to start doing
Yep.
anything about it. So
Yep.
yeah, you could be like right, but you could be like a year and a half off. So
Yeah.
but.
No. No, we are not. We don't. We generally do not mess with shorting at all.
Hey, I'm
unless
pretty
it
good
be
at it.
it.
This person.
I mean, I like, but yeah. Also, you do it with like at-risk capital. That's like, I would say, you're not betting the farm, right?
Oh
Like,
no,
it's a bet, right?
it's only a couple
So
million.
it's only a couple mil. It's Paul. It's only a couple mil.
Yeah.
Yeah, no.
Well,
It's
what Paul did
so
is extremely risky. If you just
yeah.
buy contracts, your risk is just losing what you put in. So
Oh yeah, yeah. Well,
a lot of
and
times
the
you can't even
thing,
short it because like shorting stock, your broker has to actually have the stock to give you. But
yeah. Well, and I'm just like bullish in general. Like I just
yeah,
lean
in
bullish. Like
general, it's like,
I like to be bullish. So like I would much rather take some type of calculated risk position on a bullish position that I think is like super 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 like a huge disconnect in the market. Like I mean Meta kind of would have been one where
oh yeah,
it was a I think at the lows it was trading at an operating cash flow yield of like 18%. Like
mm-hmm.
that's maddening. It had like no debt. It was insane. So yeah, I would rather take calculated risk on things that I'm really bullish on that I think have been like just demolished by the market unjustly and unfairly. But even then you have to be right on the timing. Well, if you're doing commons, you can just stagger in, and that's pretty much all I do. But if I was going to do any type of options play, you still have to be right on the timing. So, because you're at risk of time decay, or is it theta? Is theta time? Theta
Theta,
decay? Time
yeah.
decay? Theta? Yeah. Because like okay, so like Meta, let's see, where did it get to? Operating cash flow. Yeah. So this is just a quarterly point. Their operating cash flow yield was at 15.5% at one point. At the lows in the 80s or something like that, I think it was at 17.5 to 18. Like it was so destroyed. So destroyed.
Oof.
Like I think like the basic PE was what, 8?
I was
It's
crazy.
like
Yeah.
and it's like that's for a company in a sector that could easily trade at like the multiple that it's trading at now, right? Like a 20, 30 PE. What's it at right now? What's the PE right now? I don't know. Yeah. Ugh. It's insane. Absolutely insane. I don't have basic P on here because I hate P so much. Let's see. It's at 31 P right now. Yeah.
Jesus Christ.
Jesus.
That's current, right? Is that current or forward?
That's current, right?
Oh
That's current.
my God.
It's current P of 31, and it was trading at a current P of 8 at the lows, right?
Oh,
Just like this is one of the most vicious V-shaped recoveries I think I've ever seen. Like that's wild, man. That is absolutely wild. So yeah,
man, can
meta
we
to
go back to the
400.
currency crisis? I missed that.
What was that?
The currency crisis last fall, where everyone was like thinking the US currency was gonna, or all like the world's currencies were gonna just fall apart. It's like,
Yeah, I mean,
buy me some more stocks.
there's always something. I feel like, right? There's always
Mhm.
something kind of going around, and most of it, like, especially when the market sells off. A lot of times, the market sells off, and it's not really like super warranted, or I would say like the like risk premium the market puts on it is like greater than what actually is. But COVID was one of those that was really interesting because like nobody knew what was going to happen, right? Like,
Mhm.
is this thing going to like sweep through and just like kill everyone? Like, that was like, I mean, that for a while you just didn't know, and then I think that's why the recovery was so quick was when that information started coming to light of like, okay, the criticality of it, like who is most likely at risk of dying and stuff like that. That's when you kind of like the market was able to be like, oh, okay, this isn't that big of a deal, and then we had that like vicious recovery. Because what was SPY? Well, and I mean the Fed obviously helped, right? But this initial drop, February 14th, was a little over a month, and then it took us what March, April, May, March, April, May, June, July, August, 4 or 5 months to get back to all-time highs. Like, it was such a quick recovery, man. That was insane for that big of a drop.
I don't even remember much of that beginning because I was like, I got sent home, and then I'm like trying to figure out what the hell I'm gonna do. We didn't even have laptops, and
Yeah,
we didn't have remote working setups,
I
and
remember.
I'm
I
like,
remember
I'm on the phone the whole
market.
time. This is nuts.
Yeah, I remember the market opened down 15% one day. It's like one day, gap down 15%. It's like, oh my god, this is insane. Bye, bye, bye. What do you got there? What you sharing? Oh,
Someone had
dollar.
to. It's one of my favorite memes. It really happened
It's
though.
almost like the US dollar is needed.
Yeah. I don't know if people, you can Google like dollar milkshake theory is an actual theory put forward by an economist, I think. So, but it happened though. It's the idea that when there's like a crisis of currency in the world, everyone flees to the US dollar. So,
Yeah.
and they did literally.
Dollar milkshake Dan.
So the US just sucks all the liquidity up of the world. So US stocks, bro.
Yeah, that's right, man. US stocks, bro. Let's go. Um I am majorly US stock bias.
Oh
Like,
yeah.
I will flat out admit it, and I'll tell people why if they want to know, but sometimes like, people's opinions are so like uh I don't know, so concrete that like they just don't want to hear anything. Um but yeah, I I think there's a reason that the US trades at a premium. I think it's a valid
Mhm.
reason, and I don't think that that is going to change anytime soon. It might, but I think there are very, very valid reasons that other countries, other regions, other political environments, why the equities that are based out of those areas trade at a discount, and I think it's a valid discount. Um,
Oh,
yeah,
I mean, we're a nation of laws, right? It sounds weird to say that, but like the government can't just change laws, seize assets here. Like they can't just do whatever they want without court action or
yeah, but like not only
Congress
that is
doing
like
like something.
we're we are very like investor friendly, like very investor friendly. right?
Mhm.
Even a lot of like the compensation and structures and um the things that, CEOs are, or like inventors, business owners, founders, a lot of them are compensated through the stock price going up, right? Like, I don't know. So I feel like we don't have a lot of companies that milk cash flow through distributions. We have some, right? There are definitely some out there, of course, but it seems like the biggest thing right now is just like, oh, buybacks. Everybody do buybacks,
Mhm.
and pump that price up, baby. Um, and and I am much more comfortable with the international exposure I have through U.S. equities than the international exposure I would get through international equities. So, like, when people are like, "Oh, well, the U.S. you don't have any international exposure," I'm like, dude, like the SPY, like 40% of the SPY's revenue comes from international. Like, shut up. Like, I am, I have more than enough like international economic exposure. Um, like Jesus, like
It's still
Microsoft,
wild to me
Apple,
that
Google, Amazon, Coca-Cola, Pepsi, like
yeah.
all of the huge US S&P 500 companies have massive amounts of international exposure, and some of them have more international revenue streams than US revenue streams. I just
Mhm.
like the regulatory structure that they operate under more. So,
Yeah, like,
I don't know.
McDonald's lost, I think it was 9% of their total revenue when Ukraine, Russia, when the war happened, because they shut down all their McDonald's. 9%. And the stock briefly went down. You wouldn't even know if you looked at a 5-year chart of McDonald's, you wouldn't even know
Mm,
that happened at
yeah,
this point.
yeah,
So, but
yeah,
if you had Russian investments, now you have nothing. So,
yeah. Well, and I think that's like one of the things that I'm looking at is that a lot of the stock market returns are skewed towards the extreme ends, right? Like you look at the bell curve of returns, and like that most of the S&P 500 returns come from like what, like 5% of the companies or something like that. Um, so like in my own investing styles and whatnot, I'm like, okay, well, if I pick the winners, like I want to hold those winners. I want to I want to be
mhm,
able to let them run and let them run and win for a long time. Cause winners keep winning. No,
forever.
no, but like I want to find areas where I think there's outsized opportunity, outsized like discounts that I don't believe are potentially valid. Or fair prices in industries that I think are going to have like really, really long tailwinds, and just buy them and hold them, allocate the capital, be happy with it. Um, I really don't know what I'm going to be doing right now, like in 2024. It might be a year where I just like buy SPY or buy VTI and just like
Honestly,
see if anything pops up, but like I'm not itching to buy really anything right now. I'm just kind of like, okay, we'll see what
I'm telling you,
happens.
every housing stock I've looked at like 10, and it's always the same. October-ish, they just vertical lined.
Yeah.
It's just
Yeah,
really
man.
hard. I'm just like, everyone I've looked at that I thought was semi appealing, it's just same thing. It's like, oh, it's almost 40% up since October. So
I
I
really should have done more
just buy the
due
whole
diligence.
basket at this point.
Yeah, I really should have done more due diligence on DR Horton when I was looking into it, because it was like, oh man, it was what is it, DHI, I think. Oh yeah, let me share my screen. Oops. Because I was looking into it, and I think I made that video right in around here, and I want to say I need to revisit that video. I want to say I was like, okay, maybe like 100 to 80, it gets really, really, really interesting. And it's like it was already trading like super cheap. Man, I don't know the industry, right?
Mhm.
And from a historical multiple perspective, it was trading kind of in line with historical multiples. So like I needed to get a little bit more discounted. But I I really wish I would have just dug into the industry more, because it like came down, it gave you that low $100 buying opportunity, and then it just freaking 50% in like a month. Like, come on. Oh man. But that's it's one of those things where like your valuation has to line up, but like your confidence and your knowledge in the industry has to be high enough to where you actually can feel comfortable allocating capital to it, right?
Mhm.
So there's so much involved with it. What was I gonna look at? I don't know, but yeah, that was one where I was like, man, I had it on my radar. Somebody in the Stone Cold Investors Discord brought it up to my attention and was like, "Hey, can you do a video on this?" And I was like, "Yeah, sure." And I was like super intrigued by it. I just kind of like put it off to the back burner, and yeah, unfortunately, might have missed it.
Still gonna look for a little while.
You're still gonna look for a little while.
Yeah. I don't know.
Yeah, yeah. Well, I mean, it's yeah. The thesis.
Other
is
than that, like you
interesting.
said, you just buy like an index
Yeah.
or stack cash.
Or like I might, and that's why I'm like, okay, maybe I'll trickle a little bit into Google and Amazon here and there, or I'll trickle a little into some of the higher conviction individual stocks that I think are around fair value. But kind of keep that cash pile up to where if we do have a nice sell off, you know, I've got some firepower to go. So might just be a year of like, you know, index some individuals here and there, and then, you know, trying to make as much money and save as much money as possible.
So basically, we're gonna have to switch to crypto content because we're not gonna
Crypto content. Ah, man, never.
Because
Let's see, what is this?
if you don't have any stock ideas, just start staying Bitcoin's future.
Oh, suggestions on 24. I mean, I'm still trying to figure it out.
I don't know.
I still
dude.
think
I think there's gonna be stuff, but I don't know.
yeah, I'm almost like working on being patient. Like, okay, I still want to, I want to do the research that I want to do. I want to get knowledgeable in certain industries, and then I want to just kind of sit back and like see what presents itself, right? Like, I'm kind of not in a rush.
But you can look like
But
utilities was the only thing that really did badly this year, and it's like I don't want to buy
yeah, and
utilities.
utilities and energy, right?
Energy was like okay, but like utilities got just destroyed because of the debt issues with most of them.
CrowdStrike ad, bullish CrowdStrike. Yeah, energy kind of got
And
wrecked.
I have a watch position in Exxon. Honestly, I think about it. So
Yeah, man, I was. That might
the
be
carbon
to look
offset
into.
idea, the more companies I've heard, their
Yeah,
their plan is it sounds like they're going to do carbon offsets to meet their carbon neutral goals. Instead of being literally carbon neutral, they're just going to buy offsets. Exxon is in a great position for that as they transition a bit.
yeah,
I wouldn't mind putting like maybe 10, 20 grand into Exxon actually.
yeah.
Sure.
I think I
I
would be
mean, it's
more
not going to be a
interested
meta
in.
return, but it's secure, I think, for what I need.
Yeah, I think I would be more interested in energy than utilities. Utilities, I don't know. I'm not sure if I want to be in utilities long term. Some staples also kind of took a hit this year. So what?
Yeah.
Coca-Cola, Pepsi, J&J. Pfizer.
The
There you
people
go.
buying Pfizer right now
Pfizer,
kill me.
Biotechs. Is that your baby?
Pfizer. Like I don't know. Pfizer never
Is
does anything for investors. When I did a video, I didn't go crazy deep on it for my video, but they don't do anything for investors ever.
Yeah,
They just keep dumping all their cash flow basically into M&A and investing in small startup like pharma companies. Oh,
yeah. What about
it's
Disney,
such a
man?
shitty bot. Its business model just sucks basically. Like what company?
Disney.
Ooh.
What about
I
Disney?
mean,
How you feeling on Disney?
I kind of wish I'd sold it at 96 now, right? But
Oh,
oh,
yeah.
I think now, I think people forgot that some of the movies coming out were still from before they decided to make this pivot. So I think we're through that now.
Yeah.
But
I
I don't really want to buy
I'm
any more, but I'm not the thesis is still there, I think. Like
I might buy more. I might buy more. I don't know.
I'd be more apt to buy more than sell. I guess I could say that. Yeah.
Yeah, I think I think there's going to be this like massive I think they're kind of on the cusp of their streaming being a lot more profitable and being less
Mhm.
of a drag on the overall business. Um and I think when that happens, it could get some massive bid ups. So
Well, they
I
said
don't know.
they
I'm
committed to less spending on content combined with increasing prices. So they've
yeah.
already done that part.
I
They're just gonna put less volume of stuff out.
Yeah, I think they're going to be the second, like long term. I think they'll be the second streaming platform behind Netflix.
Mhm.
Um, like who else would challenge them? I don't. I can't really think of anything.
Netflix, Disney,
Warner Brothers, maybe, but like Warner
Apple.
Brothers, I think there's going to be a big gap between Warner Brothers and Disney.
That merger is so stupid. It's so
Are they
dumb.
going through with it?
If they go through with it, the combined entity is gonna have like 60 or
Yeah,
65 billion of debt.
I gotta let my dog out real quick. Keep on talking. I'm listening.
Oh, okay. So it's just the absurd amount of debt that they'll just never be able to just pay off unless they can spin off some of that debt in a merger. Um, I don't really know. All right.
Gonna
This
get
is now
18 this weekend.
crypto short trade hour. We will talk about all things crypto with five. Oh, he's back now.
Dude, I so Stone Cold Doggo, that's right. What was I gonna say? No, they're gonna do like another AT&T disaster if they actually go through with this. I just like they're
Oh,
so debt laden right now. I would just like stop it. Just like stop. Like I oh man, I don't know. It maybe if it was a share based deal, just because like I wouldn't want them to take on any more debt. And like a share based deal would probably be bad for the share price. But like, I don't know, man. They're so heavy in debt.
but I mean, Disney, like, okay, if they sold ESPN on board with that, that'd make me rethink. I don't want them to sell ESPN. I think
Well, they've got
they've
ESPN
cut
bets too,
expenses.
though,
So,
right?
hmm?
If they
Yeah, they
sold
got the betting thing
ESPN,
now.
they'd be selling ESPN bets, right? And I think that could be a really good platform.
Yeah, I think that's a. I don't know why you'd want to sell that. Like,
Yeah.
it's not growing, but they're more fit. He cut costs, so it's more profitable. The ESPN operation and betting. I mean, they're not going to be a big betting platform. It's DraftKings and what do you call it, FanDuel, and then
Yeah.
MGM. So maybe they can squeak like 7-8% share, but that's good enough, I think, at this point.
Yeah.
Um,
Yeah. I'm not like super bullish on the ESPN side. And I'm not super bearish either. I'm just kind of like, like I think they could make some good things out of it. I also wouldn't like be surprised if it really didn't do much for them. like, um, yeah, I don't know.
but they are investing in the parks because my friend has gotten notices of like they're renovating the villas, they're renovating some of the rides because
Well, parks and cruises.
he's got the Disney timeshare. I forgot what it's called. Um, DVA or something.
Hmm.
Point. So they are spending now on the parks renovating. Yeah.
Yeah.
And then cruise
Well,
ships,
and I
they're
know that.
building cruise ships. So
Yeah, their cruise business is doing. Well, last time I looked at it, was doing pretty dang good. Um, they were getting a lot of demand for their cruise
I don't
line,
know why they
and
don't split the cruise profits out of their financials because that would blow
they
people away.
should, because I feel like those are some really good
Yeah.
profit numbers. It'd be nice to actually see that breakdown for sure. But like if uh, they just they were making so much money, essentially before the what was it, the Hulu acquisition and streaming, right? And then you just see this huge drop off in profitability just from the massive increase in expenses around their streaming platform integration and build out.
Yeah.
And I think that's going to revert. And I think they're on the cusp of that reverting and that actually becoming like a tailwind of the business. And like if that's the case, then their margins are going to recover nicely. Their profits going to recover really nicely. So I wouldn't be surprised if we see over the next couple of years their bottom line profits go back into these, like succeed these 2018 2019 levels.
Yeah, I
That's
agree.
kind of my thinking of it. So, but we'll see.
But all these
And then
businesses now like running dark black holes, sucking money in just to get more subscribers. Like that.
Yeah.
That's over.
Yeah.
That race has
Yeah.
been done, and we only got 5 players survive that. Soon to be
Yeah.
less probably.
So I think like Disney was one of those where I'm like, okay, establish a position and probably just hold it and see what happens, because it could turn out really, really good.
Hmm.
If management really just keeps being stupid, maybe I'll get rid of it eventually. But yeah, we'll see. I could also, I don't know, man. I didn't get Netflix. Well, I did get Netflix and I sold it too soon, which is another lesson for me to not play with soap, as some people would say. And I think what I've learned as well is, dude, I need to just shut out people from my analysis, because there's been so many times where I've been right, but then like hearing other people's opinions and stuff, like I'm like, oh well, yeah, maybe I'm not, or something like that. And like there's probably been a handful of times where like I would have had like banger investments, man.
Mm.
Like, and like at really good price points too. I mean,
There
we'll
was
see how.
a certain person on Discord that used to harass me about why I own Caterpillar. They used to
Yeah.
call it like a dead boomer company, and they're like, "Why would you own something like Caterpillar?" I'm like, how do you
Yeah.
not see what this company is like? And
Yeah.
industrials don't just go up like vertical lines like a tech company.
Yeah.
They'll have like a
Like,
2-year period where it does nothing, and then all of a sudden the stock goes up 50% in 2 months. So that's like a very industrial thing to
yeah.
do. But
Yeah.
that's what I
Enphase
have to
was one
believe
of
with
those.
Agco. I'm like, Agco's been in this rut of like 100 to 120, and I'm like, I just at some point I'm thinking it's going to shoot up to like 180, 190.
Enphase was one where I was man, I was telling people for a long time, like 80 is really my point, where I'm like, okay, I think this makes pretty good sense on like a risk adjusted basis for like a pretty cyclical industry that I think will have longer term tailwinds. And then I like talked myself out of it, like right at there. I was like, I think I bought some at 120. I bought some at 100, and then I took a really nice chunk at like 78. And then I was like, you know what? They're probably going to have another 3 quarters where it's going to be pretty bad. But like if interest rates drop, the market's probably going to front run that, and they're going to move up for that. And I was like, I'm just gonna get out, because there's like at the time I think there was like Paycom and Paylocity, where I was like, these guys are starting to trade at more reasonable levels, and their revenue streams are really, really, really consistent, right? It's almost like a SaaS based revenue stream. They're not going to have the cyclicality. So I was like, okay, well, I'll sell this, move a little bit into those, and just shoot, man. I think I like sold it at like 82, and it's just freaking to the moon. And some of it was, just like listening to people be bearish, and I was like, yeah, they got a good point. But man, I need to just like make my bets and be patient, make my bets, and sit back and see what happens, really. Okay, I gotta go let my dog in again. So 1 second.
Let's see. Fuhad is on the run. I'm looking at the comments. United Rental. See, no. What? Just put Goldman. Sorry, DC. Buying Goldman at these prices, huh? Let the crypto channel begin. Unleash your crypto. Oh my god. Please tell me you got who out there watching this actually has like significant percentage of their portfolio in crypto. Come on.
So I didn't tell you this the other day, man, but I actually got an email to promote some crypto.
You did?
Yeah.
Oh no.
Some company contacted me to promote some crypto, and I was just like, what the no.
I don't know if I haven't gotten those or they go right to spam. I don't know.
I've got a couple of things, like little things here and there, but I was
Have
like,
you heard
oh my
of
God.
the coin before? The one they
Oh
offer?
no.
Okay.
It's like, I'm sure it's some like, pump and dump shit. I don't know. Stupid coin or whatever. Shiba, Plebla, whatever.
Just
Coin,
make your own
but
coin, the Jesse coin. The Stone Cold.
Stone Cold coin.
And swear that you have all your money in it along with everyone and you believe in them. And
no crypto. Don't worry. I'm not going to crypto.
there's that. Have you seen that one channel people have been posting in Strongman's? The guy that's he's pushing a grayscale trust fund, one of them.
Oh, really?
It's hilarious. Yeah. It pumped in like 2001, crashed. Nothing since then. And now all of a sudden it pumped up like 10x last month.
Yeah.
But now is when he's actually cheering you on to buy it. It's like, Jesus Christ. Like,
it's just pumping again with crypto.
Yeah.
Right.
I can't imagine holding like the 24-hour trading of this stuff. Like I had a little crypto in 2020 for fun, but like I don't want 24-hour trading of an asset. Freaking, you go to bed and you could be ruined and you wouldn't even see it. Like
the grayscale one could have been like, it would depend. Well, obviously he's an idiot and pumping it after it's already pumped, but like that could have potentially been an interesting one if there was, the only thing I can think of is if there was a massive discrepancy between the NAV and the trading price, right? Like if it was trading at like a 50% discount to NAV, like you could be like, oh well, it should recover potentially at some point, maybe, but then there's a lot of risk in that as well. So, but I don't know. Yeah, crypto is just kind of like, I don't know. I owned Clean Spark for a bit, and then I sold it going into 2023. To kind of like, actually no, it wasn't going into. It was in the middle. I think it was like 340 or 380 or something like that when I sold it. Just to kind of like clean that slate and be done with it. Because when I was redoing my analysis, I was like, there's so much of their depreciation is valid. Like it's valid depreciation. Like they're gonna have to replace all of these miners on like a 5-6 year basis. It's not like they're going to be able to recover anything from that. And that just kind of like blew it up to where I was like, yeah, it's not even worth it. But man, that thing has had a massive move this year. It's insane. So hindsight, I'm a horrible investor.
I had like 4 Ethereum tokens and half a Bitcoin, and then I just sold them. Well, because the Ethereum in like 2 months it went from 700 to like 1500. I'm like, what is this shit? So I sold it. Then it goes to like
done
3,500. I was like, holy crap.
Man, it's greater fool, right? Yeah. So I'm really interested to see what Bitcoin does long term. Like if it has a tulip moment, you know what I mean? Like if, one day or 1 month it just goes all the way down to zero. And everybody's like, "Oh yeah, this stuff is actually like worthless."
It doesn't do anything.
It wouldn't surprise me if it happened because there's nothing that like tangible about it.
It's not like
Even
you
on
own
like
the
a
coins, your name's not even on them. They could just disappear from your account one day. It's like,
I don't
oh,
know. That's
it's
funny,
gonna
man.
come this year. The YouTube crypto pump is back.
Oh yeah.
At least the beginning of the year. We're gonna see a lot
Actually,
of it.
that does one of the sections or sectors of the market that I've kind of been interested in is more small and mid cap because I feel like those have still kind of lagged. And I have a couple small and mid caps right now that I'm like, okay, I think these could potentially do good, but that was more around a thesis around the business. But it'd be interesting to like potentially dig into small and mid caps more
Mhm.
and see if I can find some gems in there that you know might be able to ride any type of a sector tailwind overall small mid cap sector tailwind if we see any type of like rotation into those. But currently I do not have that much. What is Google at? And Google's almost back to all-time highs. Amazon, it's got a bit to go, man. Dude, January 2023, man. Should just load it into like big tech. Come on. So easy. So easy. Microsoft. Dang. I'm interested to see like when that next pullback is going to be, or just the next like kind of lull in the market, because everybody's going to be like touting their gains, you know what I mean, right now. Like anyone, like if you were breathing and you owned stocks that were somewhat decent, you should have done really well in 2023. Like it was pretty easy to get like 50% returns or something like that.
Mhm.
um I think it'll be really interesting if we go through like a stagnant market for a while. Um, and I was looking at Warren Buffett, um, his returns throughout his life, and he had some killer like years and decades when the market was just doing nothing, man. Like he was crushing it. He was
Hmm.
getting like 30% returns, and the market's getting like 2. But I think that will be. It's always going to be like when we go through markets like that, you actually find out who's doing pretty good on like a risk adjusted basis.
Mhm. I do good in all markets. The dividends
I,
flow.
the dividends, passive income, bro.
It flows. Free water.
It flows through me. Oh, I got a new book that I'm pretty interested to read. Have you seen this one? It's
No.
the let's see.
The ultimate money mind.
Yeah, it's basically like I don't know, like I don't know if it's a biography, but it just goes over his life and his like investment philosophy and his mindset
Oh,
around investing.
I got this. I think everyone's read
Like,
this at this
oh,
point.
Psychology of Money.
Well,
Who's that by?
I just finished this morning, so
Oh yeah, that's a good one, man. I like that one.
yeah.
Uh, so that's
Uh,
something that like I would really like to talk more of here and there is like portfolio and position management and like managing like accumulating and cutting positions. But
People just
like
want
it's
you to
so
tell them what to
valid.
buy, bro. What stocks
Well,
to
no,
buy.
like yeah, exactly. Like it's so valid, and I think like people like need to focus on that a ton. But then like if you do it on YouTube, it's like people are just like, oh well, what should I buy? Or oh, should I do this? Or oh, should I do that? And like I don't want to like.
They want you to tell them what to buy, and then they want to be entertained with Grifter Slayer videos, and that's about
Yes,
it.
yes. And then the grifters come into chats with their fake accounts.
Yeah.
Oh my god.
You could do a
Yeah.
series. It'd be fun.
So in the comments, you guys, what are your guys' favorite investing books? I need to get lists for 2024. I think this one is going to be really, really good. I can't recommend it yet because I have not read it, but I've listened to a couple podcasts by the author, and they were really, really interesting. Art of Execution, that one is awesome. Link in the description below, actually. So my Amazon affiliate account.
Oh, you have it on there.
Yeah. If you guys are interested in that, there's a link in the description below. Amazon affiliate account. Thank you for supporting my grift. Art of Execution, I think, is really, really good. It basically goes over the different types of investors that this billionaire money manager had, and how they established and cut positions, and held positions, like, and basically which ones actually did decent and which ones totally sucked. He breaks it out in a pretty interesting way. So what type of investor are you from that one, Dan?
Kind of felt like I was the assassin. I guess we all say
Yeah.
we're
I
probably
feel
all rabbits. Who fucking knows?
I feel like I'm more like the hunter because I like to stagger in positions, and like I don't have any problem like getting a position with like a small allocation and then it going down like 20, 30, 40%. And if nothing changes, like just upping the allocation in a pretty meaningful way, right? Shout out to Strongman. Stop being a broke loser. Best book. Let's go. I gotta have him on the channel sometime. Strongman, if you out there, we're gonna do this sometime. But yeah, it's pretty interesting. The assassins, they're pretty much in it heavy, right? Almost right away, and then they have stop losses essentially, and they'll
Yeah.
just cut it real quick, right?
Use
Whereas
the DCA in more, but I'll either buy like the whole position, a third or a half up front.
Yeah,
Like Signo was a third, and then
okay,
but then I got another third, and then never got to the final buy. I don't know.
yeah,
But like I
dang,
bought the
Signa.
entire Disney position at $81.
Okay,
So
yeah, nice. All right, well, it has been an hour and 13 minutes, so we'll give it a couple more minutes. If you guys have any questions or anything like that, post them in the chat. We'll go over them, and if not, we will go ahead and cut this in a couple minutes. Principles by Ray Dalio. Have to check it out. Let's see. Ooh, Fuhat. Mastering the market cycle, 100 marks. Interesting. Let's check that out.
100 marks.
We got the investment checklist. All right. We're just gonna make a huge like book list. Let's go. I'm gonna have to like watch this back and take notes.
I've never heard of it. Never heard of that one.
Yeah, that's pretty interesting. That's that's seems like it's more management company focused. That's pretty cool.
Checklist.
A Random Walk, yeah, I've read that. I've read A Random Walk. I've read is it Common Sense Investing or something like that, or like the little red book on common sense investing by Bogle. Yeah, I'm a huge fan of index funds. Like I think index funds like, you know, SPY, VTI, VT, whatever. It's like the easiest way to just, you know, build long-term wealth. Like buy, never sell. You know, one would say, you know, if you just made 8% a year in them, you could be a billionaire.
Imagine that.
Imagine that. Imagine not having to short Nvidia to get 8% returns.
Dear God.
Expectations investing. Nice.
Someone's gonna tell us Benjamin Graham's book. Yeah, whatever.
Little book of valuation. You know what I need to do is I need to start going through a lot more of Oswath's books, DeModern's. He's got like a decent amount on valuation and um qualitative analysis. I think like business analysis. It's pretty interesting.
I mean,
Cole,
you can just
we are naming investing books, and Bacon, happy New Year to you as well.
he'll on
Thank
his
you, man.
YouTube channel, he'll just put 15 like a 15-part lecture while you're at work. You can listen to it.
Yeah, like I do that. I have a
Yeah.
hard time listening to that type of content though and working at the same time. It's weird. Like my brain is, I don't know if it's just my brain or like what, but like I can listen to music no problems and go through work and work really really well. But if I'm listening to something that like I want to like actually think about it, I find that it's really really hard for me to like multitask those two things.
Hmm.
Fooled by randomness, common sense on mutual funds. Cole, is that the same one as the little, what is it, the little red book on common sense investing by John Bogle?
Well, according to Paul and Mode, you should mutual funds because they have they're more expense ratio than ETFs.
Yeah, it's way better just to short Nvidia.
I know. So worry about saving on expense ratios, not millions
Yeah.
of dollars
So,
lost.
but in all seriousness, my strategy for a long time was basically around increasing my income, decreasing my spending, and then as much tax savings as possible. So and throwing everything into like a total stock market, like a total US stock market fund. So
Hmm.
for a long time it was just like max out 401ks, max out IRAs, max out anything that's like a tax advantage.
I was thinking more like don't screw up the 5x gains I made during the Great Recession.
Right.
That's why I got into dividend. I'm like, I need to protect this so I don't blow up my account again, like .com.
Did you have some not degen, but some momentum plays in the Great Recession? Oh 08, 09, right?
Yeah. Oh, 09. I got back from deployment. So
Okay.
no, I went construction, copper
Oh.
miner, a copper miner and Caterpillar. And then there was like 2 or 3 others, but I
Yeah.
nailed those trades though. That was pretty good.
Well, you held those like long term too, right? You still have
Oh,
them?
no, the copper miner was gone like 3 months or 6 months.
Oh, okay.
Caterpillar sold almost all of it. So, because it was like $30 to 120, I think. So,
Both Boggle. Okay. Full by randomness. Nassim Talib. I'll have to check that one out. All mutual funds are actively managed.
according
Are
to
they?
Paul.
Are they though? All of them are. That's why they have them called active and passive, because they're all active. Oh man. All right, another one. We got skin in the game. Okay.
Who is NASA?
Man, I'm gonna get like a reading list of like 20 books. This is great. Cole agrees, so I'm right. Yeah. Cole is the almighty decision maker here. So All right, guys. It was fun. I'm gonna go get ready to watch some football. Thank you
Oh,
guys again. Pretty crazy to get to surpass that 1,000 sub milestone. Um, and I don't think I have any bots either. So I think it's all been pretty organic, good growth. So it's been great. Really enjoy the community, all the people. You guys are awesome. And yeah, we'll have more coming in 2024, and it's going to be a good year. No matter what, it's going to be a good year. So thanks, guys, and we will see you in the next one.